Hey everybody, hope everyone's doing well. This is the Emini end of day review for Wednesday, August 14th, 2024. Coming into the day, on the daily chart, you can see we have a 4-bar spike for the bulls, crossing the moving average. But the overall context, big up, big down, big up, tight trading range down here, testing a breakout point here. This looks like a rally within a trading range. We rallied, we went sideways, rallied again. I thought the expectation was disappointing follow-through for the bulls today. Probably not going to get another consecutive trend day, just like yesterday, where today opens on its low, closes on its high somewhere up here. I thought more likely we would go sideways and disappoint the bulls. From the close of yesterday, you can see there's a gap between the close of the bar and the breakout point, the close of the bar and the daily moving average. So we have trap traders below. Any trader who saw the sell-off, they sold a pullback, maybe they sold the breakout point or the moving average, they're currently trapped. So they may use any bounce to exit, and so that may lead to some support below. But the expectation coming into the day is sideways to down starting by the end of the second hour. That's the case following most trend days. And then on the 5-minute chart, actually just really quick, look at the Globex chart and see what happened overnight. And here's the Globex session. So here's the close of yesterday, somewhere around here. And then look at the overnight session. Very tight trading range. Actually, the entire Globex range was made up by the 845 bar on the 15-minute chart. That's Eastern time. So the high of this bar and the low of this bar is the entire Globex range. And that's about 25 points. So it's actually relatively small compared to the size of the daily ranges we've been getting lately. And whenever the Globex range is relatively small, it increases the chances that we get a breakout below the low and above the high of the range. But the expectation, again, you look at the overnight session coming into the day. Lots of trading range price action, very tight trading range. You're expecting more sideways coming into the day. And you can see this blue line is yesterday's high. And coming into the day, we have a small gap up. Here's yesterday's close, and here's the open. Bar 1, we gapped up and then had a bear reversal bar. So right away on the open, it's a gap up and then reversal down. So big up, big down. Looks like a trading range open. The bulls tried to get a breakout and could not get followed through with bar 1. Bar 1 is strong enough. We're probably going at least a little bit lower, and probably sellers above and buyers somewhere below, although maybe not directly below the bar because it's a fairly strong bear reversal bar closing on its low. We're also expecting a trading range open because 80% of days have trading range opens. So without even knowing any context, you can just blindly guess that it's going to be a trading range open, and you'll be correct 80% of the time. Bar 2, we sold off a little below bar 1 and then reversed up. Bull bar closing on its high. But think about the gap up. The market opened here and immediately we sold off. So any trader who bought up here, betting the gap up would be strong. We'd get follow through like yesterday, gap up and follow through buying on bar 1. In this case, the bulls would have been trapped, so they're disappointed with the entry if they bought at the open of the day. So we have trap traders above, disappointed bulls above, probably looking to sell out of longs around the open of bar 1. So bar 2, it's a high 1, but bad context. Good looking signal bar, but context trumps the signal bar strength. So still probably sellers above. 3, we sold off. Traders sold the close of 2. We could not get above the high 1 signal bar. 3 is a decent trend bar, and now we have a 3 bar micro channel, strong enough for the bears to get a second leg down, but we may pull back first because it is an implied 2 legs down. 1, pull back. 2, bar 3 is a little climactic. We're testing the moving average, the middle of this tight trading range, so we could bounce, but this could be just one breakout, and in fact it is a breakout on the 15-minute chart from the high of bar 1 down to the low of bar 3. Probably sellers above and a second leg down. 4, we rallied but stayed within bar 3, so 4 is an inside bar, and the bar closed below its midpoint. The bears controlled the bar. We rallied, but the bears saw it as a pullback, and they sold. The bulls were unable to keep the bar closing above its midpoint, so it's a sign of weakness by the bulls. Bar 4 is a weak sell signal bar as far as selling below, has a bull body. It's after 2 legs, 1, 2, bear bar, bull bar, bear bar, bull bar. So the bears are unable to get consecutive bear bars. This is not as strong as it could be, but the micro channel is continuing. We're probably going to go at least a little bit lower, but probably buyers below 4, sellers above 4. Another inside bar on 5, so consecutive inside bars. That's an II pattern, but it's occurring in the middle of a tight trading range. So whenever you get these breakout mode setups, these IIs or IOIs or any variation of those, when they're occurring in the middle of a tight trading range, they're less meaningful. It's really just a sign that the market's going sideways, which we already know, and there's no trend to continue, and there's no trend to reverse. So in this case, probably going to go more sideways. But still the micro channel for the bears is continuing, so probably more to the downside. This is a fairly tight channel, but not very strong. So we can get a brief pullback in second leg. But overall, this looks like a bear leg in a trading range. Maybe 1, 2, 3. Probably buyers below bar 5. 6, we broke out, but the breakout bar is weak. It's a trading range bar, but as far as buying above 6, you'd be buying a 6 bar micro channel. The signal bar itself is a doji. It's a weak signal bar. And the odds are there's sellers above for a second leg down. It's also forcing you to buy. If you're buying above bar 6, buy with a stop order in the middle of a tight trading range. So not really ideal. But as far as selling here, you might be selling near support in a weak channel, even though it's tight. Again, maybe 1, 2, 3 legs down. And then consecutive inside bars. A doji starting to go more sideways here. 7, a bull reversal bar, tried to break out to the downside and reversed up. Some traders will see a wedge. A couple of ways to look at it. Maybe from bar 81 yesterday, 1, 2, 3. 7 is a wedge bottom, buy setup, but still a micro channel. So it's a 7 bar bear micro channel that reduces the probability for the buy. The signal bar is also small, so the odds are if you buy above bar 7, put a stop below, you're probably going to lose the trade. You'll get stopped out. It is okay to take the buy if you use a wider stop and are willing to scale in. One way you could do that, you could use a stop, a measured move down of the bar, or maybe even 2 times the measured move of the bar. Put a stop down here. Maybe you buy, scale in lower. Because the reality is, any bull who buys above 7, stop below 7 is a skunk stop. But if you buy above 7 and scale in lower, you're probably going to at least break even. This looks like a bear leg in a trading range, and it's unlikely. It's probably not a bear trend from the open. Also considering the context from yesterday, we haven't had a meaningful trendline break. So the odds that this is just a bull trend into an immediate bear trend, very unlikely. And then just one more thing. The odds that bar 1 remains the high of the day, that's about a 20% chance. And with all of the trading range price action on the open, this looks like a bear leg in a trading range. The bear bars are getting bad follow through, lots of overlap, and then look to the left. It's a bull trend and then a trading range. Probably just a bear leg in a trading range that will be followed by a bull leg in a trading range. 8 traded above 7, but disappointing entry bar for the bulls. It's an outside bar, but just like I said, with the consecutive inside bars, outside bars are pretty much meaningless in trading ranges. It's just more sideways within overall sideways. Micro double bottom, you can buy above bar 8. Signal bar, not strong, it's a bear body. And the bear still may get a second leg down. Again, this could all be just one leg, even though we see 3 pushes, 1, 2, 3, maybe 4. These are implied legs, and on a higher time frame, it's a simple breakout. So this may be leg 1, maybe a pullback, and then leg 2. If this is a trading range, we're expecting breakouts to fail, which means to not reach their measured move targets. So one thing traders might look for is a leg 1 equals leg 2 measured move. We can start with the bodies. So maybe from the open of 1 to the close of 6 is leg 1. And then you place that on the pullback and project it down. So there's leg 1, and then maybe pullback, and maybe down here's the target for the bears for leg 2. Bar 9 breaking out a little more to the downside, but fairly big or fairly prominent tail below. So we're down, we're up, down and up. Not a very strong breakout for the bears. Also not a very good stop order signal bar for the bulls. The channel down is still fairly tight. And the bears, overall this looks like a trading range. Where's the low of the range? Could be here. Could be here. Could be down here. We don't know yet. But we know the momentum for the bears is fairly weak, getting a lot of overlap and buying pressure, tails below bars. Maybe a double bottom with bar 71 yesterday, but still not a very good signal or setup for the bulls. Not a good signal bar. The bulls need to do more. And then bar 10, we got a bull bar closing on its high. Inside bar, it's good for the bulls. Similar to bar 2, the bulls have a couple of bars closing on their highs, but we still need a trend line break. So here's a bear trend line. Ideally, the bulls get a trend line break, a retest of the lows, and then a possible major trend reversal. For the bears, they're hoping the trend line holds and we find sellers on the close of bar 10 and continue to the downside. I'm going to clean up the chart a little bit. Bar 10 being an inside bar reduces the probability for breakouts, probably sellers above and buyers below, because it's still a tight channel, but it's a bad stop order signal bar. 11, we rallied, so now we have consecutive bull bars, 10 and 11, closing on their highs and breaking the bear trend line. That's good for the bulls. However, you think about the structure of major trend reversals. What you need is, first of all, you have a trend and a trend line. You get a trend line break, and this is still a minor reversal. And then the expectation is a test of the trend's extreme. So we may come back down, test the bar 9 low, and then here the bulls look for either a higher low, a double bottom, or a lower low, major trend reversal. But so far looking pretty good for the bulls. However, for here, this is a minor reversal. So even though it's breaking the trend line, you probably have bears selling the first trend line break. In a bear channel, bears sell rallies, and this is a rally in a bear channel. The bulls who bought lower were buying for scalps. They got a scalper's profit here, so they may look to take profits. So with bulls selling out of longs and bears selling to get short, we probably have to go lower to find buyers. However, at this point, the rally from the low of bar 9 to the high of 11 is strong enough that there's probably buyers below bar 9. 12, we went sideways. It's an inside bar. It's a doji. Bad follow through for the bull breakout, so we did rally, but then went sideways. 12 is an implied high 1, but we're still expecting a retest of the trend's extreme. 12 is a bad low 1 signal bar for the bears. It's a trading range bar closing above its midpoint. There were buyers into the close. However, the same thing I was saying right here with the major trend reversal is happening on a smaller time frame right here. We have a bull trend, 3 bars up, and it's a micro channel. But then bar 12 broke the bull trend line. So bull trend line break, and then the rally is retesting the trend's extreme. So if a bull bought the close of bar 11, this was their entry bar, they suffered a maybe 6-point drawdown, and then the market came back to near their original entry price. Those bulls might be disappointed enough to exit their longs, look to buy lower. For the bears, it's a minor major trend reversal pattern. So again, on a smaller time frame, it's more clear. Maybe I'll pull it up. Bull trend line break, retest. You're expecting sellers here, and then a reversal back down. 13, big bear trend bar. However, you look to the left, and there's a couple of problems. I mentioned the leg 1 equals leg 2 measured move, and look at that. Here's leg 1, pull back, and then leg 2, 13, is basically getting vacuumed straight to that magnet. So we're at a leg 2 measured move. It's a wedge bottom. A couple of ways to look at it, maybe bar 3, 9, and 13. Also, look at bar 13 compared to the rest of the bars today, the rest of the bear bars. It's clearly the biggest bar and the strongest looking bar. However, that can be a sign of weakness. There's open gaps from the close of this bar to the low of bar 12, the close of this bar to the low of bar 9. So are we expecting this to be a measuring gap or an exhaustion gap? At this point, we don't really know. Maybe it's a measuring gap and we go for a measured move down here. And it makes sense. You look to the left, that would take us to the bar 52 low area. Maybe we retest down there. I think less likely we go for this measured move. Here's a measuring gap from this high to this low. Unlikely we just fall down here. To me, I think more likely 13 is a sign of exhaustion, and it's a possible major trend reversal set up for the bulls with a lower low. So what we might have is the weak bear trend. It's a bear channel on the open. Trend line break, a vacuum retest of the lows. We went well below the low. And if 13 gets bad follow through, especially if the gap closes on the next bar, so if the gap from the close of the bar 13 to the low of bar 9 closes, then it's no longer an open gap. It's probably not a measuring gap. It's probably an exhaustion gap. This pattern also reminds me of what we had on the open yesterday. Over here, bars 5 through 10, it's a weak bear channel with maybe 3 pushes down. Very similar to over here with a weak bear channel. And then there's a trend line break. It's really fascinating. Weak bear channel, trend line break, vacuum retest. It's funny, it's actually the same exact bars too. So bar 13 is a vacuum retest of the weak bear trend's low. It overshot the low, so it's a lower low, major trend reversal. Actually, in this case with bar 1, it's a double bottom. Over here, it's a lower low with bar 9. But it's just funny, it's a very similar pattern. And then bad follow through 14, just like 14 over here. So it's probably not a measuring gap. The gap actually closed on the very next bar. So now there's no gap between the close and the low of bar 9. Bar 14 is a bar that always in bears might have to exit above. Maybe they wait for one more bull bar, but it looks like maybe leg 1, pullback, leg 2, climactic, second leg, wedge bottom, maybe low in a trading range. Bar 1 is still the current high of the day. It's unlikely to remain the high of the day. And the bears, as far as the bear strength, not very strong through here. And then 13 looks like a strong bar, but it could easily be due to strong bulls stepping aside. I think it's maybe less likely strong bears selling aggressively. It's more likely bulls not wanting to buy here, wanting to buy lower. The price gets vacuumed down to where the bulls are willing to buy, and then you can see they bought. So it might be flipping to always long here, but we might need maybe 1 or 2 more bars to confirm that. But reasonable stop order buy above 14 for an opening reversal, swing of the day, possible low of the day. And for the bears, if they're short, they can exit and look to sell higher. 15, the entry bar for the swing for the bulls. Not a very great entry bar, closed below its midpoint, but the flip side is that it's a low one short with a bull signal bar after a strong bull trend bar. The odds are there are buyers below 15, the rally from 14 to 15, strong enough for buyers below and a second leg up. 16, we're continuing higher. Now we have a 3-bar bull micro channel crossing the moving average. There's also a leg 1. So you look to the left, there's really not a bull leg coming before it. Like somewhere over here, you might say leg 1, leg 2, leg 3. We don't have that over here. We just have a bear channel, possible major trend reversal. This is leg 1 for the bulls. At this point, it's still minor, but it could become major, and it's the biggest bull breakout of the day. On a higher time frame chart, this is a 2-bar reversal. We just sold off on 1 bar, reversed on the next bar. On an even higher time frame chart, it's simply a reversal bar where it opened up here, big tail below, and then closed up here. However you look at it, the market is telling you it's reversing. It's a strong enough reversal for a second leg, and it's leg 1, so it's important to just get long. Doesn't matter if you buy the close of bar 16, buy a small pullback, maybe buy the high of bar 15. It's just most important that you get long. Good follow through for the bulls on 17, a bull bar closing on its high. You can see we tested the high of bar 15 and then found buyers. So limit order bulls buying the high of the prior bar. We have a negative gap. So even though these bars, the high of 15, the low of 17 did overlap, the bodies remain open. The close of the bar, the open of the bar here, the close here does not overlap the high of 15. This is a pretty strong bull breakout. Probably buy the close, buy for any reason. Always in long. At a minimum, probably going to test the bar 1 high. What about selling at yesterday's high? We had a bull breakout attempt on the gap up. The market rejected it. We're getting another attempt here. The problem is the approach. The approach the bulls have to yesterday's high is too strong. This is too strong to sell against it. You're probably going to get a second leg up, which means if you're looking for a reversal, you're probably going to lose. So if anything, wait for a second reversal. 18, we tested yesterday's high and looks like we closed just about at it. 18 is not a good sell signal bar. It's a 5-bar micro channel. Probably better to buy below bar 18, expecting the first reversal down to fail. And again, strong enough leg for buyers below and a second leg up. Might go for a measured move up to here. And then 19, another bull bar, so still by the close. The bulls are trapping the bears. This is a strong breakout. You can see we went straight through yesterday's high, didn't even really hesitate there. and that makes the high of yesterday support. If any trader sold the high of yesterday, they got trapped on bar 19, so any retest will lead to buyers below and support. 20, we're testing yesterday's high, but look at bar 20 compared to the past 5 or 6 bars. And you ask yourself, is bar 20 strong enough to reverse this bull breakout? Probably not. And this is one of the classic examples Al will use when he says beginners love taking reversal trades like this, where you see a rally and then you finally get a bear bar and you think, I can sell below this bar, put a stop above, my reward is huge compared to my risk. The problem with that trade is your probability might be a 30% trade. Much more likely that you find buyers below the first pullback. So we pulled back below bar 19 on bar 20. The odds are there's more buyers below for a second leg up. 21 inside bull trend bar, closing on its high. It's actually an IOI pattern here, so bar 20 is outside bar 19 and 21 is inside 20. So IOI might be a bull flag, bull trend, sideways. Bulls will buy above bar 21, expecting trend resumption. The bears don't have enough selling pressure in here for a reversal. 22 a doji. So for the bulls, not an ideal entry bar, but for the bears, if it's a micro double top with bar 20 and 22, 22 is not strong enough to sell below. If anything, you can buy below the bar and expect more to the upside. Another doji on 23. So fairly disappointing for the bulls. We're going more sideways. But again, for the flip side, for the bears, look at the selling pressure. When's the last time a bear made money? Even limit order bears are not making money. So for now, we're still always in long, and the bears are probably waiting for a better setup to start selling. We're probably at least going to test the high of bar 1. 24 getting a bull breakout, and we're getting close to the bar 1 high, probably going at least a little bit higher. It's a bull bar closing on its high. Might be a measuring gap. So at this point we have this rally. Now we're getting another gap. The close of bar 24 is above all of these highs. So we might have a measuring gap and we could go all the way up here. But because of the structure of the day, so far, looks like a trading range, a bear leg in a trading range, maybe a bull leg in a trading range, although this is much stronger than the bear leg when you compare the strength. You compare the buying pressure through here versus the selling pressure through here. We're probably going at least a little bit higher. But because it's big down, big up, we may not get the full measured move for the bulls like this. And just like the bears, instead we may get maybe a leg 1, leg 2 measured move to here. So you can see that's a more conservative measured move than here. Not by much, but better to look at the first target and then go from there. So again, at this point, bar 24 is either an exhaustion gap or a measuring gap. And at this point, we don't know. But I think more likely we're at least going a little bit higher. This is too tight for the bears, not enough selling pressure. This could all be seen as one single breakout, even though there is a pullback here on just one time frame higher. There's no pullback. and this is just a simple leg and a strong rally. 25 breaking out further to the upside, so it's a good bull breakout, closing far above the bar 1 high, probably going higher, probably go for a measured move of bars 24 and 25. You can see that takes us very close to the leg 2 measured move that I have drawn. It's still always in long, still buy for any reason. Buy below any pullback, buy the first pullback below a bar. You buy maybe the midpoint of bar 25, but just important to be long because we're probably going higher. Follow through bar for the bulls. And now we have a micro channel since all the way down here, bar 20, all the way up to 26, and then a strong 3 consecutive bull bars here. Nothing to sell, buyers below the first, pullback probably going higher. 27 outside down, but again, compare 27 to the rally all the way down here. It's similar to bar 20. Bulls might look at 27 as a discount. It's a bear outside bar and a pretty strong rally. So they may use 27 as a buy the close bar, buying a pullback. And you can see that's what they did. They bought the close at 27, 28 a bull bar, closing near its high. Inside bar, again, IOI might be a bull flag. Just like here, we rallied IOI. Bulls will buy above for another leg. We rallied IOI, bull flag. Bulls buy above for another leg. The problem with a leg here is that it might be a third leg. So maybe leg 1, pullback, leg 2, pullback, leg 3. We know that leg 3 is the highest probability, or let me rephrase that. There's a higher probability of getting a deep pullback or even a reversal after leg 3. And you see it all the time. Think about it with wedges, like even here, 1, 2, 3, or maybe 1, 2, 3, then we got a deeper pullback, or 1, 2, 3, reversal. It is different here because this is a tight bull channel, but when you do get a third push and it's a parabolic wedge, the expectation at a minimum is a test of the last buy climax. So even if we rally here, we could easily come back down and test the close of bar 27 or the open of bar 28. But for now, probably going higher, not enough selling pressure for the bears to be short. Bull breakout, we're getting another gap, so there's a space between the close of bar 29 and all the bars to the left. It's either a measuring gap or an exhaustion gap. Maybe we'll go for a measured move of this IOI. The bears were hoping 27 would sell off, 28 pulls back, and then we reverse back down on 29. We get a micro double top. So if that were the case, you'd be looking for, as a bear, you'd be looking for a breakout below the neckline and a measured move down to here. But instead, we got the bull breakout, and it doesn't look like it's a double top, but theoretically, the bears were looking for a double top with 29. It's failing, so we may get a measured move up instead. And on 30, we would reach that measured move. We're getting very close to the leg 2 measured move. We'll probably get there. And now 4 bar micro channel, but lower probability buying up here. Even though the bars look good and it's a tight bull channel, it's 3 legs, 1, 2, 3. We could easily come back down and test here. So I think at a minimum, probably better to look to take profits at measured move targets in a leg 3. And then for the bulls, maybe look to buy back down here. This might end up being an exhaustion gap. Small bar 31, it's an implied high 1, but might be late in a rally. We're at least 15 bars into this rally. And now we're getting a high 1 after a possible exhaustion gap testing measured move targets. It's still always in long, looks good for the bulls, but any sign of hesitation, any bear bar closing below its midpoint, bulls will exit. And then a bear reversal bar, bar 32. It's just like these bars, 20 and 27. It's very unlikely that 32 leads to a major reversal and we go into a bear trend here. However, it's 3 legs up, 1, 2, 3, and then a bear bar closing below its midpoint. We tested the leg 2 measured move. It's enough reason for bulls to take profits below this bar and to be flat. Bears, if they're aggressive, they might sell looking for the gap to close, betting that this is an exhaustion gap and not a measuring gap. So the first target for the bears, this red line, closing the gap. And the bulls may start to come in buying again down here. But it always depends on the approach. The bulls aren't going to blindly put limit orders below. They want to see how the market actually gets there. Kind of like over here, there were bulls buying on limit orders below because look at the bear bars. Bear bar, bull bar, bear bar, bull bar. Bad follow through. Really just consecutive sell climaxes is a channel on a lower time frame. And you compare that to this. The bears are not really selling above this. This is a strong bull spike. It's not consecutive buy climaxes to the upside. It's more sustained and controlled buying. But up here, so reasonable for bulls to exit. It's an aggressive short for the bears. If a bull does buy here and uses a very wide stop, the odds are they'll be able to scale in and make money. 33, we got a trading range bar, consecutive bear bars. The high of 33 tested the close of 31. So if a bull bought the close of 31, disappointed 32, 33 gave them a chance to exit at break even. And the bulls took that opportunity. And then a bear breakout 34. So for the bulls, this is a trendline break. Now one problem that the bulls have, maybe this gap will close. We're getting vacuumed down to support. But before I get into that, let's look at the tight bull channel. And we will notice, here's the midpoint of the rally, this red line. You can see it's below the bar 1 high. What that tells us is if we're looking at this rally, the majority of the rally is actually below here. Here's 50%. So more than 50%, maybe 60% of the rally is within this trading range. So for the bulls, only maybe 40% of the rally is actually breaking out, and all of a sudden we're closing all the way back down here again. This is a problem for the bulls. 34 getting acceleration to the downside, vacuuming down to the last third push, the third push up here, the start of that buy climax. So probably going at least a little bit lower. The expectation is major trend reversal, so tight channel, trend line break, retest of the highs, and then maybe the bears try for a reversal. But we also saw 3 pushes up, bulls who bought the close, exited on 33 and 34, looks like a give up bar, as opposed to over here. These don't look like give up bars. This looks like a decent minor reversal, but this looks like a give up bar. Bulls getting out, and then bears can sense that and they start selling, and then more selling on 35. So consecutive bear bars. It's good for the bears, but you look to the left and it's just big up, big down. Might be a 50% pullback of the rally. So again, here's that 50% level. You can see there is buying at that level, but this is too strong to just simply buy the 50% pullback. Strong enough bear breakout. You have disappointed traders above, probably sellers above, disappointed bulls above, trapped traders above, bears who didn't sell, trapped out of a good trade, bulls who did buy up here, didn't get out, they got trapped into a losing trade. So sellers above, here's a breakout point. The bar 27 low. Broke below it, probably get a retest and then a second leg down. 36, minimum follow through for the bears. So we broke below the moving average and then got a doji on 36, the absence of a bull body. 36 is a weak high one. There's probably sellers above. But we also might test the moving average and the breakout point. So maybe sellers at a distance above 36. 37, a bull trading range bar. It's a reversal bar, but fairly small. Is 37 going to reverse this bear breakout? Probably not. Probably a minor reversal. Sellers above, looking for a second leg down. Another bull bar, 38, but still a minor reversal. Very strong, or very small bars compared to this stronger bear breakout. But because this is a trading range, we can get a deep pullback. Testing this breakout point, maybe we get to the 50% pullback level. That's not far above the breakout point. And then we went outside down 39. So at this point, the bears have their minimum expectation, leg one, pullback, leg two. We look to the left, we're testing a breakout point. So the bulls broke out here. This was a breakout point. You had trap traders here, and when we come back to retest it, it becomes support. So an outside bar and a leg two testing support. The bears really need follow through on 39, and then they get disappointing follow through on 40. 40 is a high two. You can also look at it as a wedge. 27, 36, 39, or 40. It doesn't matter that the first push happened before the bull trend was over. It's 3 pushes down, so there's an increased chance we bounce here, test the high of bar 39. Bears can exit above bar 40. Bulls can buy, but use a wide stop. Be willing to scale in lower. And then we vacuumed up to the moving average on 41. Good entry bar for the bulls, probably going at least a little higher, probably testing the high of 39 at a minimum. But look at the past 5 or 6 bars. The market's been sideways, and it's big up, big down. The market's in a trading range. We might be in an upper range here. Maybe it's a bull trading range day. So down here, there was a trading range. Then we rallied, deep pullback. Now there's an upper trading range. So this might be the lower third of the range down here, and then up here might be the upper third. So better to be long in this area. Strong enough breakout for a second leg, but we could easily get a deep pullback because it's a trading range. 42, follow through for the bulls, 3-bar micro channel, probably buyers below. Probably going higher, but again, might get a deeper pullback. 43, pulling back, but buyers below 42. It's a weak stop order signal bar. 43 becomes a high one signal bar, but it's a bear bar, possible double top, probably sellers above. 44 broke out to the upside, disappointing the bears who sold above 43. So if you sold above 43, this was your entry bar. Fairly disappointing. The problem for the bulls is that it's 2 legs up. 1, pullback, 2, and then sellers into the close of the bar. It might be around a 50% pullback of the sell-off. So there's 50%. We're testing it with 2 legs up. This is still fairly tight, probably buyers below here. So we can get a deeper pullback, but it's obviously fairly confusing. Big up, big down. So you're getting a strong enough bear breakout for sellers at 50% and a second leg down. But now we're getting a rally that's also strong enough for buyers below and a second leg up. 45, a deep pullback. And that might be testing 50% for the bulls. It went below it. Here's 50%. We poked below. 2 legs down, 1, 2. Now 45 is a high 2, micro double bottom, weak signal bar, probably sellers above. They may not come in until above bar 44. Might be a spike in channel for the bulls, spike, pullback, channel. 46, a small bull bar going mostly sideways. The market's in a tight trading range here. Limit order market. Sellers above, buyers below, more sideways, doji. There were buyers below. It's a weak stop order sell. We have a bad stop order buy. The bulls might get one more push up, maybe 1, 2, 3, but probably sellers above. And then as far as the bear case, really just a tight trading range, not ideal for entering. Looking for a breakout For most traders, better to just wait and let the market do its thing. It's a tight trading range. Wait for a breakout. If you are trading, you can see what the institutions are doing. They're buying low, selling high with limit orders. Outside up 48, we went below and reversed up. So maybe there's a little more to the upside, but the upside is probably limited. Very tight trading range. 49, bull breakout, possibly 3 legs up. 1, 2, 3. Or over here, 1, 1, 2, 3. At this point, it's a truncated wedge. Maybe we'll get above 44. However, the upside is probably limited. And then you can see what happened. On 50, we did get above bar 44 and then reversed back down. Now for the bears, there's a wedge top. Bear bar closing on its low. But the selling pressure through here is fairly weak. All through here, the bears have 2 bars closing below their midpoint, and that's 43 and 50. And that's not very good selling pressure, so the downside's limited. It is 3 legs up. We might have some sort of correction, but it's probably minor. The best the bears can hope for is probably a scalp, probably going more sideways to up here. Maybe they test the 50% of this, the midpoint of this range. 51 sold off, but it's a weak entry bar for the bears. It's another one of those beginner trades. You see 3 pushes up, a bear bar, bear reversal bar, but look at the context. It's a very tight trading range. Beginners want to sell below this bar. It's a good signal bar. The risk is small. The potential reward is 2 or 3 times the risk. And the problem is probability. Now you have a bad entry bar. But for the bulls, 51's a bad high 1, or it's a high 2, micro double bottom, but top of a tight trading range. The upside's probably limited. 52, bull. It's a trend bar, but in this context, I would call it a trading range bar. It's a very small bar with lots of overlap. Very tight channel through here. Again, the upside is limited. The market is in a tight trading range. It's a limit order market. Sellers above, buyers below. Outside bar 53. It's a nested 2 or 3 legs. So maybe 1, 2, 3. And then here, 1, 2. Probably sellers above. 54, inside bear reversal bar, similar to 52, where the bears see a triangle. It's some sort of wedge or reversal pattern. They're looking to sell below 54 for a breakout and test of the lows, but the selling pressure is still weak. Since bar 40, so it's been 14 bars, the bears have 3 bars with closes below their midpoint, so the selling pressure is weak. So probably buyers below 54, maybe not directly below. Maybe we sell off for a brief couple of bars, but probably going to continue more sideways. 55, bear breakout, but buyers into the close. It's a weak breakout bar. Look to the left. We're in the middle of a trading range. The downside is probably limited. Might be enough for a second leg down and sellers above 55, but unlikely to lead to a bear trend. Sideways 56, maybe leg 1, pause, maybe we get a brief second leg, but probably buyers below 56 and 55. 57, more sideways. On a smaller time frame, it's a bear breakout and then a bull reversal, big down, big up, and then sideways. Market's deciding, but it's a tight trading range, 50% chance the first breakout fails. If we do get a bear breakout, it'll probably reverse. If we do get a bull breakout, it'll probably not go that far. More sideways, 58. Very tight trading range. This is barbed wire. Not worth doing anything. Better to just wait and not place trades. Bull breakout on 59. Closing above the past 3 or 4 bars. The bulls still need follow through. Even if they get it, the upside is probably limited. Very tight trading range. Follow through 60, but it's an inside bar, but it's enough for the bulls to probably get a second leg, and buyers below 60. 61 going a little higher, spike in channel on a smaller time frame, but resistance to the left. 62 going a little bit higher, breaking out above the bars to the left, but failing. It's a trading range bar. 5 bar micro channel, enough for a second leg, but buying here is high in the tight trading range and not ideal. 63, an inside trading range bar. So the past few bars, we have a small spike in channel trend. On a smaller time frame chart, it's more obvious, and we're testing resistance to the left. The bulls are having a hard time breaking out of this trading range. We also have the breakout point, the 27 low. Actually, we're below that. Let's see. What do we have to the left? The next area of resistance might be the high of bar 35. That will probably be resistance. Sellers above here. This could all be leg 1, complex pullback. Sellers above for leg 2. 64, more sideways. The bulls are failing to break out, but the bears don't have a really decent sell setup either. Micro channel finally got a pullback below 63. The low one is likely to fail. Buyers below for a brief second leg. The bears looking for a second reversal. Bull breakout 65, breaking out above the bars to the left, but still there's problems for the bulls here. Overall, tight trading range. Look to the left. The last major breakout was a bear breakout, so probably sellers above. 66, vacuuming higher, maybe testing the low of bar 33. There was a gap there. And you can see that's where we're testing. So it's possible we find resistance at this level. You had bears back over on 33, 34, who did not sell because tight bull channel, couple of dojis, not the best signal bars, and then we sold off. So bears were trapped out of shorts here. You also had bulls who didn't exit. They got trapped into longs. Now the market's retesting this area where the bulls and bears were trapped, and we're vacuuming up. This is either a measuring gap or an exhaustion gap. It's the biggest and strongest bull bar since bar 41. This entire, if you can call it a trend, it's basically a trading range, and it's a weak bull channel. And then 66, the biggest and strongest bar in maybe 20 bars. More likely an exhaustive test of resistance. The bulls really need follow through, and even if they get it, they're still within the high of the day. They need to get, in reality, the bulls need to get above the high of the day. And if they don't, this could simply be a buy vacuum test of resistance. And then bad follow through, 67. We immediately closed the gap between the close of 66 and the high of 65 on 67. Disappointing enough that any bull who bought the close of 66 will likely look to sell out of their longs at the close of 66 if they get a retest. 67 is a high one, but it's an inside bar and a bear bar, probably sellers above. And then we went above the high one, we tested the high or the close of 66, and then reversed down. That's a micro double top. We went up on 66, sold off, rallied again, and then sold off again. So a micro double top. The bears see a second reversal, bear bar closing on its low at resistance, high in a trading range, reasonable stop order sell, and then a good entry bar for the bears. But a big bar like 69 is actually a problem for the bears. There's no time control. There's price control, but just like over here and over here, bars 13, 39, even 35, big bars in trading ranges can be due to the opposite side stepping aside. So in this case, the bulls don't want to buy here. They're buying high in the range after a possible exhaustive buy climax, second reversal, micro double top, good signal bar. The bulls don't want to buy here, but they're willing to buy lower. So the bulls step aside. There's no one left to buy up here. The bears will take the sell and get this huge breakout bar. But any bear who sold here suddenly got 16 or maybe 12 points of profit in one bar. And they'll use that bar to take profits. So you can see the bad follow through after these big bars, like 13, then a bull bar, 35, doji, 39, bull bar. So we're expecting bad follow through, and that's what we got on 70. So disappointing follow through for the bears, but a weak looking reversal attempt by the bulls, probably going to get a second leg down, sellers above. 71, another trading range bar, minor reversal, probably sellers above and a second leg down. 72 is a low one signal bar, but now we're in the middle of a trading range. And the context, not really good for low ones, especially in the middle of the trading range. We might actually be fairly low in a trading range. Support to the left in this area. You can see we're testing the bottom of this rally, which was strong enough for a second leg. We're getting a deep pullback. Maybe the bulls start to come in buying below here for a delayed second leg after a deep pullback. For the bears, this is strong enough for a second leg. They may get a brief second leg. But again, 72 being a low one, possibly low in a trading range. More likely there are buyers below the bar, and we'll get at least a deeper pullback, like a low two. 73, bear bar closing on its low, but not breaking out below 70, and might be leg one, minimum leg two for the bears. Depending on how the bears view this, if you sold a close of 69, your follow through is disappointing, and you see you're at support in a trading range, you might look to just bail out of the trade here. 74, and it looks like that's what they did. 74, a bull bar, closing on its high, micro double bottom with over here, strong enough leg, maybe a two-legged pullback, and then we rally to test open gaps. We're in a trading range, so gaps will tend to close. So reasonable stop order buy above 74, good entry bar 75. This is a new leg one breakout. It's minor, but it's strong enough for a second leg. Okay to buy or buy a pullback, looking for a test of at least the breakout point. And then you can see bulls bought maybe a 50% pullback of 75. We're rallying higher. 3-bar micro channel, strong enough for a second leg, buyers below. And then more buying on a pullback intra-bar during bar 77, overlapping 76. Climactic bull bar, the upside's probably limited. There's probably sellers up here, and we look to the left. If the bulls are lucky, we get back to the bar 31 close. There will likely be sellers waiting there. Bears seeing a trading range, selling high. Bulls disappointed, who bought earlier, looking to get out. So maybe this is a measuring gap. And look where that takes us. So maybe 77 is a measuring gap through the space between the close and the prior bar. Maybe from here to here, projected up, takes us right to that close of 31. So a couple of reasons to get there. And enough momentum that this double top will probably not hold unless there's a really good entry or signal bar. But even then, the bears need a reasonable second entry. This is a micro channel, strong enough momentum. The first reversal down will probably fail. Good signal bar 78. You can see we rallied close to the close of 31, and then a good signal bar. But for the bears don't want to sell below 78 because you're selling in the middle of a trading range. That's the problem with selling on a stop. You're selling right in the middle of the range. So the bears would rather sell above 78 if they can, or maybe a deep pullback of the bar. And this was strong enough for the bulls for a second leg. So probably buyers below 78 for a second leg up. 79, we fell below 78, but there were buyers. Bears didn't want to sell. Bulls were buying for a second leg. But now we have a high one, high in a trading range. The upside's probably limited. But a bull bar closing on its high might go a little higher. 80, we did go a little bit higher. Bull breakout and good bull bars, but bad context. 2 legs up, high in a trading range. The upside's probably limited. 81, we got another bull bar, 3-bar micro channel, and the bar ended up closing, the daily bar, or the day itself, ended up closing near its high. So we have a reversal bar. We opened here, sold off. On the open, we got a lower tail, and then we ended up closing near the high. So a bull reversal bar closing basically on its high. For always in today, not that clear on the open, lots of trading range price action, but then you get Down to here, the context might be always in long. This might be a reversal setup, and we did become always in long, and we remained always in long until here. That's a problem. This is a give up bar for the bulls. Might be always in short here, definitely always in short here, but the problem is context. Big up, big down. Whenever you flip to always in a trading range and it's clear, you probably want to do the opposite. So we might bounce here, but we'll probably get a second leg. Then we got a second leg, but it's an outside bar, climactic. Really confusing. We're in the middle of the range. So in terms of always in, not really clear. Better to think buy low, sell high. And all through here, lots of trading range price action. Not really clear with always in. Better to just look to buy low and sell high. Stop order trades today. I thought bar 14 was reasonable. This is a leg one breakout. You can buy above 16, 17, 18. Any of these bars by the close. Decent high one, IOI, 21 you can buy. 24 you can buy. IOI, 28 you can buy. But getting riskier here with 1, 2. This would be a third leg up, so this is more of a scalp. And then these are really aggressive, but once you get 34, you can sell below that bar. You can sell 35, but that's more of a sell to close bar. Better sell to close than below the bar with the buying into the close. Strong enough for a second leg, but look to the left. And then possible wedge, 27, 36, 40. Okay, buy above bar 40. Through here, no stop orders. Really not the context for it. Tight trading range, limit orders only. The next best stop order, probably below 68. And then I thought 74 was also a reasonable buy. Then you could buy above 75, 76. But getting worse, the higher you get in the range, more of a scalp. And then for limit orders today, tight enough bear channel for sellers above the first pullback, so sellers above bar 7, even though it's a good looking bull reversal bar, not enough buying pressure at that point, and it's a micro channel. Through here, maybe you sell the trend line break. We know there's a trend line break. I actually want to go back and look at that if I can remember after I go through the limit orders to look at the major trend reversals. I think it's interesting. But this is a minor reversal, so a high one, 12, there would have been sellers above but did not trigger. And then down here, strong enough rally, buyers below. So buyers below bar 19, buyers below 26, and then less optimal to buy below on a third leg up when you can get a deeper pullback or a reversal, strong enough reversal down, 36, high one, likely to fail. You can sell above. And then all through here, just buy below bars, sell above bars, and scalp, but not ideal for traders to trade in here. I thought selling above 67 was reasonable, possible exhaustive buy climax, testing resistance. 67 is a high one, but bad context, sell above. Down here, 72, low one, but bad context, you could buy below, or you buy below 70. And then through here, really late in the day, not worth it, but I did think it was reasonable to buy below 78 for a scalp. And the day type today is a bull trading range day. So we had a trading range on the open down here. We rallied, and then a trading range, an upper trading range up here. And it's a bull reversal bar on the daily chart. So where do we go tomorrow? The bulls are collecting bull bars. We haven't had a bear body in 5 days. And that increases the probability that the first reversal down will fail. There'll be buyers below today's low. But the context is big down, big up, and we're getting to an area where the bears sold the last time we were here. So even though in the daily chart this is a bull breakout and follow-through bar, when you crack open the follow-through bar today, bull reversal bar closing on its high, this is the bar. There's an awful lot of trading range price action, and it's really not ideal for the bulls. So probably sellers above today's high, buyers below the low, and we'll probably go more sideways. This is a rally, but we're in a trading range. And just briefly, I want to, if I can pull up the maybe 100-second chart or 1-minute chart and look at these major trend reversals. So really quickly again, what I'm looking at is this bear trend line break, retest, and then major reversal. And there's even an even smaller version right here where the bulls had a rally, trend line break on 12, retest of the highs, and then a reversal. I just think it's fairly cool to see that pattern over and over. So here is what I was talking about. The first one, we have this bear channel. Here's the trend line. So fairly tight bear channel. First reversal will probably fail. The bulls made a trend line break and then a retest of lows. Well, there's the trend line break. And what do you notice about the trend line break? For the bulls, do you really want to buy here when it's 1, 2, 3 pushes up? And remember, trend bars, everything is very context dependent. So a trend bar can be a sign of strength, or it can be an exhaustive end of a move. And when it's 3 pushes up, counter trend, this is a bar that bears are actually looking to sell, and any bull who bought will take that bar as a gift, get out of their longs. And that will lead to, we actually got a double top and then a retest of the lows, which overshot the lows. And I wanted to talk about this one as well. Parabolic wedge. So first reversal probably minor. Here's a bull trend. We ended up getting a trend line break, but probably sellers above disappointed bulls. And we rallied on 12, but found sellers and then a reasonable sell below this bar on the 1-minute chart. So I just thought that was cool. As always, please feel free to leave questions in the comments and include timestamps for any question specific to this video. Alright, hope everyone has a good night. Thanks for watching.